Is it possible that $75 into these three stocks we will discuss today can actually replace your full-time job? I mean, is it possible to see your account balance increase by more than your annual salary in just a single day without having hundreds of thousands of dollars to buy stocks? Well, let's take a look at what the math actually tells us on this. I mean, is it the truth or is it complete hype? And I'll tell you the three stocks I would buy to attempt to accomplish this as well, since we are getting a nice pullback on all of them too. So hey, we might as well discuss the stocks as well. Just make sure you like the video if you like getting the truth without the hype. Okay, so let me address this first right up front here with you guys. What do I mean by $75 into these three stocks will replace your full-time job? Now for me, I'm talking about compounding. I have no clue what anybody else is talking about when they make those same style videos. I have no idea. And I agree with most of you guys out there that you most likely aren't just buying a $75 fractional share of Tesla, for example, and making millions later on. So I would agree with you guys there completely. But on the flip side here, I hear repeatedly in the comments, in my group even, basically everywhere, talking with folks out in the real world, I hear all the time that $75 invested doesn't matter, $200 doesn't matter, heck, $500 doesn't even matter. And in my group, we have a $250 portfolio challenge that we're doing right now, where we basically put $250 into the stock market every single week on just a simple DCA on Fridays. Nothing fancy, nothing else going on there. That's exactly what we're doing. But I still have folks that join and basically tell me $250 a week doesn't matter. And as a matter of fact, a lot of those folks say it's laughable to even invest so little each week because you're never going to get rich. So, I mean, basically, instead of arguing about it, we don't argue about it in the group there. Right? Instead of arguing about it right here on YouTube, let's just do the actual math on it. The math is what matters, not opinions or my opinions or, anybody's thoughts or anything else of that nature. We can put actual math to this and see exactly what's true and what's not. So basically for this example, I'm going to use the $250 a week that we started up right there in my group and kind of see, does that $250 a week invested actually matter? Basically looking out over the long run, hey, does it really make a big difference or not? I mean, most of us are sitting around probably thinking, yeah, kind of, Luke, maybe not. I don't know. Well, that's why we're going to do the math. So I'm going to assume you're picking growth stocks and I'm going to start with a 20% return per year there. That's it. Nothing crazy. I'm not going to go over the top with my example or anything like that. Understand that it's a great return too. Trust me, if you can return 20% of return per year, you're doing very, very well in the market. But that's it. I know many of you guys have had a 50+% averages over the last 5 years, for example, and some of you guys have over 100% returns the past 2 years. Basically 2 years in a row, you managed to double up your portfolio. That's incredible, but I want to be conservative here and kind of also keep this in mind whenever I use a 20% number. Even Warren Buffett has said in the past, if he was investing in smaller amounts and he didn't have kind of all the restrictions that kind of come around being Warren Buffett and the amount of money he has and the amount of, limited investments he can actually invest in to actually make a difference to Berkshire. Basically, if he was in you and I's situation, he could easily average 50% a year. And now that's coming from Warren Buffett, who's traditionally conservative. He doesn't say, 10 trillion this, or I can, 30x portfolio in a year or anything. He doesn't say things like that. So when he says something like that, he's probably giving what he probably feels is a pretty conservative number too. But on the flip side of that, I'm right there with you guys. I'm not Warren Buffett, so I'm only going to use 20% for this example. So using that 20% return, $250 a week for 10 years. And yeah, remember, I'm a long-term investor, right? And I know a lot of you guys are like, 10 years, that's forever, Luke. Is it really? I mean, talk to anybody that's my age, 10 years doesn't really seem that long ago. And I promise you, take your age 10 years from now, and you let me know what you think about this. So whenever I plug everything in, I'll put it right up there on the screen for you guys. I get $487,000 and some change. So the way I kind of choose to view this, to me, that's a big deal. But think of yourself 10 years ago, right? 10 years prior to this. And you tell me if today, having that extra almost $500,000 in your portfolio wouldn't help out big time and change your financial picture. Some of you guys might not matter much, but I think for a lot of us here on this channel, it is an absolute game changer for us and absolutely changes our fortunes, or at least our outlook and our ability to invest completely differently than the way a lot of us can right now. But guess what, guys? That's not the magic or the power in this. That's not where it lies, okay? So follow me here. We'll keep going here with this example. If you're in your mid to late 40s like me, for example, and you go back 20 years, right? Which basically you were in your mid 20s there, perfectly reasonable time to start investing, a nice small amount like that. and you do the same exact thing I just discussed, change none of the parameters except for the timeline from 10 years to 20 years. So I know a lot of you guys are thinking, hey, all right, great, Luke, maybe the number doubles. Maybe you got $1 million now. Hey, that's awesome. Good for you. That's great. Well, honestly, the number is going to shock you guys, and I'll put it right up here on the screen for you. You would have $3.998 million, basically $4 million in your account today. That is the part of compounding that a lot of people don't understand because they don't do the math out that far. I mean, you guys tell me, what does your life look like today if you had $4 million in your account instead of what you have in it today, or just the $497,000, $487,000 we just discussed? So to me, anyone scoffing at $250 a week, which is all we did throughout that entire exercise, nothing more, just that. Somebody who scoffs at that number, either one, doesn't understand how compounding and how compound interest works, or to them, $4 million isn't a lot of money. And hey, good for you if that's the case. But for most of us, $4 million is a life-changing amount of money. And that absolutely proves doesn't take a lot of money, doesn't take crazy returns, nothing 10x this and 10x that or anything else of that nature in order for you to be extremely wealthy in really, in terms of your lifespan, right? 80 years, 20 years of it. It's all that it takes. 1/4 of your life can have you wealthy the rest of the time there. So again, you don't need hundreds of thousands of dollars to invest. You don't need millions of dollars to invest. Just that amount of $250 a week, which I understand in some cases, especially when you're younger, is harder. But if you get disciplined with your money early, that becomes a super easy target to hit later on in life, especially as you kind of move up the income ladder as you get older. So yes, when you have a $4 million portfolio, you easily have swings in a day that are six figures, $200,000, $300,000 swings. That obviously for a lot of folks is a, year or multi-year salary or multi-year salary. You can kind of depend upon where you're at and what stage you're at in life right now. That is the exact point, and the $250 challenge that we're doing in my group is to illustrate that. I want to be able to show it. Somebody can jump in 10 years from now, log in there and see, wow, that portfolio is massive. Luke must have done, nope, there it is right there. Every single week, consistently, the same exact DCA, week in and week out, no more, no less put in than that $250 per week. And actually, there's a few more stocks that I'd like to add. I'd like to add at least 2 more stocks to it there. They just haven't gotten down to evaluation yet for me to add it yet. That's the entire point of that $250 portfolio challenge, is simply to illustrate just that. Yes, obviously my primary buys and my primary portfolios happen there in the group as well, but that's what the $250 challenge intent is simply to show this concept right here we just laid out. And if you're serious about turning around your financial future and learning how to invest, make sure you take advantage of the March Madness sale that's going on right now. It's the pinned comment down there. We'll talk more about it at the end, but yes, you get the $250 portfolio challenge and a ton more. Again, we'll talk about it at the end, but let's get into the stocks right now that I personally would choose and that I think give me one of the best chances to do that. Again, I believe there's a couple more stocks that I'd like to add to this particular portfolio, the $250 portfolio challenge. They just haven't got down to the right valuation yet for me to add. So they may never get down to that valuation either. So I might very well just be riding on these horses there. Obviously, I own all these stocks across all my portfolios there. But what are the ones that today I feel give me the best chance to hit those marks on average in my portfolio? Let's talk about those here. So the first one is Sofi. All right, I don't know if you hadn't been paying attention to this channel for a while, if you don't think I believe in Sofi long-term here. We've been getting a nice dip on Sofi. I'd like to see it get a little bit lower before I start adding more Sofi to that. But that's the whole beauty of the $250 portfolio challenge, is you just simply DCA into the stocks week in and week out. Sure, whenever Sofi is a little bit higher, I lay off. I don't buy as many shares. Obviously, as it's been dipping lower, I've been buying more and more and more shares of Sofi in that portfolio there. But clearly, Sofi is at the beginning of their growth curve. It's a small enough market cap to where we can see huge market cap appreciation over the long run in regards to the stock. Has an incredible management team. They're just at the beginning of their profitability. They're continuing to gear the business towards future years, not just trying to give us profits today, just simply to make Wall Street happy and everything else of that nature, which is the exact kind of stock that I love to have in a portfolio like this. Now, it's a volatile name for sure, because again, it's still mostly trader controlled. Again, that's part of being at the beginning of that journey there. But nonetheless, I believe it's going to be a great stock long-term. So it's absolutely one that I have to have in this portfolio, and that I'm essentially buying every single week at varying levels, depending upon where it is in regards to valuation. So stock number 2 is Palantir. Another one that you guys should not be shocked by at all. I love Palantir. It is a great stock. Yes, whenever it started up on its big, massive hype run, just the valuation basically went sky high. I've stopped buying that particular stock for now. But probably a more prudent decision, and the one that's the most appropriate for the vast majority of investors, is just simply to DCA into Palantir as it kind of goes through this up and down journey as Wall Street tries to figure out what the stock is. I personally believe the future is massive. I've said from the start, I've felt this was a slow growth beast in terms of they just continue to add contracts. I've been saying that for years now, probably at least 3. Every week, there's a new contract added, new contract added, new contract added. And just like the idea of compound interest that we just talked about there with the example, where it kind of, hey, starts off slow. Hey, after 10 years, yeah, that's a nice number, but it's not life-changing, Luke. I mean, it's life-changing, but it's not like, oh my gosh, I'm rich, Luke. And then take the same time frame again, and all of a sudden it is life-changing money. I feel like that's the way Palantir is setting up the business long-term. Now, of course, the stock got way ahead of that fundamental piece, and we've got to wait for that pullback there to fully kind of settle out and kind of figure out, hey, where is Wall Street going to value this? Where are they going to set the multiple? A lot of other things of that nature. But it doesn't make the company any less exciting over the next 10-year time horizon or so, assuming they continue to execute there. So absolutely, Palantir has to be on this list. And like I said, probably the best strategy, especially for now with Palantir, is simply to just DCA into the stock. That's usually appropriate for most folks until you learn how to do evaluation and you understand price targets and a lot of other things of that nature, which is really hard. It takes time to learn all that sort of stuff, but there's nothing wrong. And it is statistically very, very, very hard to beat a simple DCA into the stock. So absolutely, DCAing into Palantir for me would be the way I would go if I was starting this all over again. All right, so on to the last stock right here. I'm actually going to give you guys 2 picks here. You know what? Actually, let's go with 3 stocks here, and I'll give you the reason why between each one of those, and then you can kind of select the one that you think provides you with the outlook that you're looking for in regards to the market, or maybe the company that you believe in the most out of the market here. But for some folks, this is controversial. For other folks, they're going to be like, hey, it makes perfect sense. But I'm not here to argue one way or another. So let's start right here with number 3. And the first number 3 is going to be PayPal. Now, look, I already see a lot of you guys getting mad at me right now. You're like, PayPal, why in the world PayPal? It is simply because of the valuation. I feel like there's so much upside on there to where you're right. It's not going to perform nearly as well as Sofi or Palantir. However, I do feel as though it gives me a pretty nice upside at these prices here. I do believe in Alex's vision, and this year right here is going to be the make or break year. Maybe this is one that I end up trading out of. We don't know. I'm not one to trade. I believe they're going to execute, and I believe we're going to see big EPS jumps this year in regards to PayPal stock, which of course is going to push that valuation up. Eventually, Wall Street is going to come back around to fintech in general, and obviously PayPal being one of the big dogs, if they're able to prove it, that is going to give us a nice run up in the stock there and obviously provide us a great return. Long term, do I believe it returns as well as Palantir does? No, absolutely not. I don't believe that it does. But there's only so many Palantirs out there in the stock market, right? Not a lot of companies I feel as strongly about that return long term as I do in Palantir. But nonetheless, that right there is kind of the first pick right there for me. But let's go to the second number 3 pick, and that one would be Meta. Now look, I know it's a divisive stock, but this thing is just a beast. There is so much cash coming in, and they have so much more room to monetize and continue to bring in more bottom line profits. It's probably the most profitable stock in the stock market. There are so many positives about Meta, and it just kind of sometimes falls out of favor for a little bit. It's like it kind of has this wild up and down, and not Tesla-like, obviously, but it has this wild up and down journey that it seems to go on there where, I don't know, you could buy shares last year for 400. Obviously, 3 years ago, we got it for, $80. I mean, it's just incredible the way this stock moves at times. But the bottom line, the fundamentals is it prints cash. They have billions of users, and they have not fully monetized everything that they could monetize yet. They haven't maximized that at all, which tells me there's significant upside still to go with this stock. Even if they don't really grow much, they just start monetizing everything. They're going to make a lot of money, which of course is going to push that valuation a lot higher. All right, and the last one for number 3, and I'm just going to call it the big wild card. That one would be Tesla. I'm going to put a big caveat with this one because just like Tesla goes for moonshots, not all moonshots actually hit the moon, okay? And you've got to kind of understand that when you own the stock. And the other kind of caveat that I put to it, I say Tesla when you buy at the correct valuation in regards to Tesla. If you're constantly overpaying based upon hype and things that are, 10 years into the future, that is not the proper way to buy Tesla stock. More importantly, it is not the proper way to get the sort of returns, just at 20% a year. If you bought it at 100, hey, it's done extremely well for you. If you paid 400, man, you basically had a dead stock now for more than 4 or 5 years. Yeah, we had the nice run up right there, shortly after the election, but we were right back down in the dumps again. Although, yes, I believe in Tesla long term. You have to understand valuation with Tesla. You have to understand the roller coaster that is Tesla, the craziness that is Elon, and everything else that kind of comes along with owning this stock in general. That's why for some folks, this is a great stock to own, especially if you're a disciplined investor and you kind of are willing to take on that risk and you understand that future. If you're a little bit older and you're not necessarily willing to ride that roller coaster up and down per se, definitely not the right one for you at that stage. I'd be looking at Meta or PayPal or one of those that have obviously less downside, but obviously not the same upside potential too, if Tesla hits on a few of those moonshots. So that right there is kind of that risk reward thing that you've got to kind of address for yourself and kind of create the plan and pick the stock that most likely appeals to you the most and kind of fits your goals the most. I totally agree. You could pick any number of stocks that you want to, 3 stocks. You can pick 3 completely different ones than me, and each one of us can win doing that. That's why I love investing. It's not Luke's 3 picks are the best. It's, hey, I can pick 3, you can pick 3, and we both can win. Isn't that amazing, right? That's the best part about investing. Heck, 20 of us could pick 3 stocks. None of us can use the same stock, and all 20 of us can win massively over the long run. I'm sorry, I'm not going to feel that bad if 20 years, one of you guys has $5 million and I only have $3 million and somebody else got the, the average of 3.99, whatever the case is. I'll end up with $2.5 million. Oh, darn, I lost. Did you really? No, you didn't really lose, especially if you understood what you owned and you were able to buy the dips heavier and kind of implement a lot of those type strategies like that. We can all win in the end with different stocks. That's why I love investing so much. And if you're ready to take your investing serious, you want to go to that next level, you want to see all my buy and sell alerts in real time, have me walk you through everything step by step through our courses, through our coaching, through our live Q&As, through being part of the best 6, 7, and 8-figure Discord out there, all of them helping you become a better investor. Take advantage of the March Madness sales. The pinned comment down there. See if a membership's right for you before that sale ends. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.